All right, getting ready. I think we're ready enough. Hey there, I'm Mitch Goldberg. You're watching my live stream, Be the Boss of Your Money. I'm doing this now for since October of 2019. It's almost October of 2022, which blows my mind that I've been live streaming this much. The live stream I do, it's called Be the Boss of Your Money. It didn't actually become Be the Boss of Your Money until I'm going to say like February of 2020 is when I started to, when I started to formalize what I wanted the show to be like, kind of a format. I formatted the show to the beginning, the introduction, the outro, all these things. And we talk about money and personal finance, and I inject lots of little anecdotes and lessons that I've learned along my own personal finance journey and that of clients who I've served for decades, because everybody has a personal finance journey. Everybody has had to overcome a money challenge. And wouldn't it be nice to know how somebody else overcame a challenge so that when you're faced with the same or similar challenge, you'll be better equipped to deal with it? Wouldn't that be nice? That's what we do here, which is why I love it that you're watching it. I'm grateful to you. And also, I love answering your questions. So if you have a question for me, hit me up in the comments. I love hearing from you. It's the best part of the show. So let me at it. Hit me up with your questions. And while you're watching, give us a like, the old thumbs up, a heart, an applause, a wow reaction, depending on which social media platform you're watching from. We're streaming to these over here. You see that list over there? Actually, Instagram we don't stream to, but I do post the highlight snippets onto that one. But Twitter, Facebook, LinkedIn, and YouTube are where I stream every Monday through Thursday. I'll stream on Fridays or even on weekends if something wild and wacky, uh, something wild and wacky is happening in the market. So, you know, I've had to stream a couple Fridays, but hopefully nothing will be going on tomorrow because it takes a lot of time to do this. And I'm going away tomorrow. I'll be in New Jersey tomorrow at the Jersey Shore, and I'm taking the kids. Very excited about it. I'm also very excited about Apple. Apple, not only is it representing now about 7.2% of the S&P 500, which is the biggest representation ever of a single company in the index. Okay, but the I was excited about the Apple Car, but they don't support Windows. Was that bad? Come on, Apple Car, but they don't support Windows. All right, I'm just gonna roll the introduction and let myself out of here. Okay, so here's the intro. It's gonna be a good show. Hit me up with your questions in the comments, and I'll see you in about 15 seconds. All right, good to have you back. My name is Mitch. You're watching Be the Boss of Your Money. It's my live stream. We do this every Monday through Thursday about personal finance, the stock market, making you hopefully better, hopefully empowering you to become the best financial version of yourself. I really have to remember that punchline. I like the way that sounded. Yeah. So anyway, what the hell happened? The market was up like a couple hundred points. Everything was doing great until the end of the day, and all of a sudden things just went negative. It's like, is that it? Is the party over? Is this the end of the rally? We got the good inflation numbers. Yesterday we had the good CPI numbers, consumer price inflation. It's come down a bit. Came in. Oh my god. I'm so sorry to yawn right in your face and your ear if you're just listening, but it's a long day. I'm like a little batty. This is I think the heat is just getting to me. Today's a little cooler outside, but or I should say it's hot out, but not as hot. But it's been like over a month of this just intense, blaring glaring heat. It's exhausting. But anyway, yeah. So today we had a better than expected producer price index report. Producer price, what manufacturers pay, came in lighter than expected. So more good news. Stocks are starting to go up on that, and maybe the Fed doesn't have to be as aggressive in terms of raising rates. Maybe it's the end of its rate cycle, or closer to the end than the beginning, at least, right? So that's the bullish case. But then we get into quantitative tightening. That means the Fed has about $9 trillion of bonds in its balance sheet. It does not want to hold a $9 trillion bond portfolio, so the Fed has to decide how it's going to shrink that down to maybe $7 trillion. And so as it lets bonds roll off, meaning these bonds mature, it doesn't replace them with new bonds, and maybe selling some bonds, which actually it's lightening on its load down quantitative tightening anyway, shrinking its balance sheet, getting rid of bonds into the market. But it's going to take a long time. We'll see how that affects interest rates. In the meantime, interest rates continue to stay low. So if inflation was running so rampant, and if investors really believe inflation was going to remain high and stay high, I think interest rates would be a lot higher on the long bond. The 10-year Treasury is what we really look at the most to measure, to get a gauge for how investors feel about inflation. You'd think it's the stock market, but it's not. It's the bond market that we look at. Another big thing today, gas prices. Gas prices as of yesterday, national average below $4 for the first time, I think, maybe 2 months. All right, $4 for regular per gallon. Could go right back up. Oil was up today, and oil stocks rallied today after getting crushed. They finally had a bit of a bounce back. Check my notes right over here. So, it's good news on the inflation front. Can oil go back up to 405? I'm sorry, a gallon. Can gasoline go up a gallon to 405, 410? Yeah, it can. It's going to be pretty volatile. It's we're not going to see the price go way down. And just a quick public service humble brag announcement. Hold on. Opened up Long Island Business News to see this. The Power List banking and finance list of Long Island. I'm on a power list, and the title is, I would tell you the title if I could find it. The Power List. The Power List, Long Island Business News, banking and finance of 2022. Okay, so I get this, and here I am. Look at that. Here's my picture, and it says a couple cool things. I'm going to post this on social media tonight, so keep an eye out. I'll post it on all my social medias. Financial advisor, blah blah blah. Yeah. So here's what I like of what I said. Goldberg eschews the title of financial advisor, which he sees as way too generic, failing to encapsulate the many roles he plays in his clients' lives. He believes his role goes well beyond the standard industry fare of investing for retirement, and he explains that a big part of what he does is helping clients to prioritize their needs and wants so that they can eliminate time and money wasters. Okay, he explains everything I do considers that money is a tool, not just a means to an end. Sometimes something comes out and you're just kind of happy with it. So I'll post that on social media. All right, what else do we have going on? Oh, by the way, did you know that you can't invest directly into an index, but you could invest into a security that tracks your mimics an index? I was out with my friend Jerry the other day, and Sunday we're hanging out with the dogs. He got a bagel, and he just goes, "Hey, Mitch," just out of nowhere, he goes, "Did you know that you can't invest directly into an index, but you could invest in a security that tracks your mimics an index?" I was like, "That's great, man. I'm really glad you get so much out of watching my live stream." It was just funny. It's like I should put that on a T-shirt and just walk around. Did you know? That would be funny because it's like that's what I'm known for. I'm known for saying that to everybody. But let's take a look at how things did. Since we're talking about Apple, let me make this a little bigger so you can see it on your little smartphone screen. Okay. Apple, $168, not far from its all-time high of 182, and it's only down about 5% on the year. And if you're just joining us, I said I'm excited for Apple to make a car, but I would have been more excited, but Apple just doesn't support Windows. If you heard that already like 10 minutes ago when I said it, good, you heard it again, and you won't ever, ever forget that. Okay. Let's take a look at how the stock market did. So the Dow was only up 27 points, NASDAQ down 75, S&P off a drop. Oil is moving up. It was 88, now it's 94. Still, if I told you oil was going to go when it was 130, that it was going to go down to under 100, you'd have been happy. So let's be happy at 94. The 10-year yield was up a little bit, although the 2 yield was down a little bit. I'll show you that. The VIX is a little bit hair over 20. I've been saying that if the VIX gets to under 20, we've got more rally and further upside. An article came out today by Jeff Cox, who I know, great guy, and one of the main editors. Yeah, I think he's the main editor at CNBC.com. And he wrote an article today with Nick about Nicolas. And I've been quoting the same articles as Nick in the past. And Nick says that, you want to buy stocks and the VIX is like 35 and sell stocks when it's 20. I beg to differ. I think you want to stay long, get more long if the VIX goes under 20, because it gives such an all clear signal that we have more money to put into the market. And given how many fund managers, money managers, professional investors pulled money out of the market or went into what they considered to be more stable investments, and now they see the market running away from them, I think there's a rush to get money back into the market. All right, let's take a look at the bond market. Pat myself in the corner here. So the 2-year was up slightly at 3.223. The 10-year yield was at 2.889. So the difference between those narrowed ever so slightly. Good for the bank stocks, which did well today. But still the 10-year at 288. I mean, it was 268 like in the beginning of the week, so now it's 288. That's a pretty nice size move up. We'll see if it means anything, but we're not going to know for sure right this second. And I want to show you what do I want to show you? I want to show you first this one. Okay. This is the yield spread. Negative 0.34. It was like negative 0.44, but that's the difference between the 2-year and the 10-year. And when you see this negative here, you see that negative in front of the 0.033. When that's negative, it means the yield curve is inverted, and that is a negative sign of the economy, a negative viewpoint of the economy. Okay, people use that as a harbinger of recession on the way. I think it's a pretty reliable indicator for the 13 or 14 times that it's gone negative. A recession is followed within 2 years. We'll see if it holds this time. The sample size is not exactly huge, though. Okay, and then let's take a look at the Dixie DXY. This was 108, 109, but 105. The higher this goes, it means the stronger the dollar is getting against a basket of currencies, which is predominantly the euro. So if this goes up and up and up, like 105, you see that? See that? 105. If this goes to like 108, 109, it means the dollar is getting strong. It makes U.S. exports, products we sell to other countries, in other countries, very expensive. So we don't want this to be too high. We kind of want this to be a little bit weaker. So these are all, that's a positive though for the economy and the market. In my view. All right. So this is a Thursday show. If you're new here, I like to keep these shows a little bit on the brief side, because we've kind of talked about so many things over the last couple of days. And if I had to inject a quick thing to say about personal finance, I was talking to a friend of mine who's a super successful individual. He still works and he makes really good money. and he works because he loves his work. And he's pushing 80, loves his work. We talk about the stock market all the time. And he said to me, "What's with this market? It was up so much today. It was up yesterday, finishes down today. And then one bad statistic comes out, the market's down a lot." And I asked him, I said to him, I said to him, if it looks like investors are hanging on to every single economic statistic that comes out, and they're betting everything on each statistic, overreacting, if it looks like that, well, you recognize what's going on. And the sensitivity to every statistic is just so enormous, which is why it's more important than ever to separate noise from what's important to you. Now, everything that's not important to you when it comes to personal finance is noise. This individual makes a really good income and has assets. This individual does not need to live on his assets and does not live on his assets. He doesn't need to start selling stocks and bonds and exchange traded funds and mutual funds, whatever, to pay his bills. He's got a nice income coming from his business. So my point to him was, who cares what the market does? It's about your own personal finance. And that is how you need to look at all of this. The market's up or down, and people think like, something in the world has changed or something needs to be done. That is almost never the case. It's what did you do that pertains to your own situation to further your own goals? In some cases, it's nothing. I'm not saying you should put your head in the sand like an ostrich. What I am saying is, are you properly insured for health insurance and life insurance? Are you investing every month into a retirement plan, for example, or investing every month into a non-qualified account, like an individual account or a joint account? What are you doing daily to manage money in, money out? What are you doing daily to make more money, to further your career? Are you certification or designation that makes you more valuable in the marketplace? So if we do go into a recession, you'll be less likely to be fired, or you'll be more likely to be able to find a new or better job. These are the things that you need to control, that you can control. So when I say to people, you don't have to look at your brokerage account statement or your balances every single day, it doesn't mean that I'm giving you carte blanche to say, I don't have to do anything. I don't have to look at anything. I don't have to check anything out. It just means that you can't control your brokerage account statement every day, every month, every quarter, every year. But I am not giving you a pass on doing what you need to do for your own personal finance. If you make a decision if you do nothing, you've made a conscientious decision to do nothing. No one gave you approval or permission to do nothing. You did it. You did that to yourself. So let's make sure we're doing something for our own personal finance, which will help us become financially independent down the road, so that when we do have a down market, a bear market, a market scare, an economy scare, that you realize that for your own best interest, for your own personal finance, it's not that relevant to you. And that, my friends, is the whole point of doing the show. It's the whole point of you investing for the future, right? That's the point. Okay, thanks so much for watching. I'm going to get going now. I greatly appreciate your time. It means a lot to me, and I'll see you on Monday. Bye.